Tuesday, August 15th, 2023. Thank you so much for tuning in today. In this video, I'm going to talk about the volatility dip in gold and what we need to know, what we need to focus on. So getting into it, just one chart in this video. I hope I don't drone on here for too long, but this is going to be the only chart. So here we have a weekly chart of gold. We have the long-term moving averages. I use equivalents to the important monthly moving averages. So we have the equivalent of, I think, the 20, 30, and 40-month moving average. And this is something I've talked about in recent months in some articles and other videos on how all of these long-term moving averages, they're really close together. I mean, these are coming in, right now, I want to say from 1830 to 1850. So kind of in that mid 1800s. You have I think the 20 month is around 1860. But, for the most part, we're in that 1840, 1850, mid 1800s area. And 1850 is also the 50% retracement of this. So a lot of support here in the mid 1800s. And, the last couple times we had the moving averages really tight together, before this big move in 2019. And here's another example before this huge breakdown just after the mid 90s. And also another time was really right here. I could have circled that one as well. But, I have a bunch of different volatility indicators here down at the bottom of the chart. These first two, we're just looking at the width of Bollinger Bands. And so when the Bollinger Bands get really tight, that tends to precede a big move. Well, I mean, if any volatility indicators, when they get tight or they get, they're coming down to a low point on these readings, it typically precedes a big move. And that big move, then you get, volatility expanding. So these are Bollinger Band widths. So these are just two that I've put in here. Then you have other great volatility indicators like GVZ, which is the gold VIX. ATR, average true range. And then I just put the open interest in gold down here. And that's another one to give another indication of interest in the market, which is obviously coming down. And this, if we see, right now, or as of the last report, this is pretty close to, a 5, 6, 7-year type low. And if we see open interest come down even more down to this blue line, that would be, you're almost at a 15-year low. 427,000 contracts. I think it would have to get into the 300s. But interestingly, if open interest, if there's more selling, that could come down to a 15-year low. So, back to the volatility indicators. These vertical lines, I'm showing here points where the market had a big move. I already mentioned that one and this one, but, mid 2005, 2007, these were right when the market started moving up and broke out, big breakdown in 2013. Then you had here in 2018 where, it looked like gold was going to break out. Then it broke down, then it had a false break. Then it rebounded, had the huge breakout in 2019. So, these vertical lines, you can pause the video and take a look at the vertical lines and see, here's 2013, for example. You can look how low all of these indicators are. 2019 as well. This one, came up a little bit. This one was obviously really low. This one here, GVZ, the gold VIX, that was at its all-time low before the 2019 breakout. Average true range was also very low. That was like a multi-decade low here. Open interest had moved up a little bit, which should happen preceding a breakout. But obviously there was a lot of room to run after that breakout. So the point is, gold's obviously selling off. It's coming down. I think it's going to test 1850. It has traded below 1900 in the last couple of days. So it looks like it's probably going to test 1850. Maybe it even comes down to 1800 at some point. And if that occurs, I don't think we're going to see like a sharp move down. It's just kind of a slow bleed. And so these volatility indicators, I mean, other than this one right here, all of the other ones are coming down to where they could be at a really, really low level. I mean, look at GVZ. That's already pretty close. We already mentioned open interest. That's not a volatility indicator, but the average true range here, that's coming down. So volatility is coming down. Interest is coming down. And so that should continue if gold comes down here to the mid 1800s and maybe a little bit lower. And then at that point, we'll have to assess the technicals, the fundamentals, look at the COTs and sentiment. Maybe it gets completely blown out in the low to mid 1800s. I love to see that at that point. Maybe we're close to a recession. I mean, I'm just thinking off the top of my head. But ideally, you see that happen, and gold is setting up where in the coming months, it can set up and make a major low in the low to mid 1800s. It stabilizes, and then, it starts to rebound. And then all these indicators are super low. They're at multi-year lows. And then as gold starts to rebound, the economy looks like it's going to go into recession. Fed has to ease, all that stuff. And then boom, that's when you get, the market moving towards that huge breakout. So long diatribe aside, the key point in this video is that, typically when you see these sell-offs, you see volatility coming down. I don't want to say the volatility coming down will precede the bottom, but you should get, if gold is going to come down to the low mid 1800s and make a significant bottom, before that happens, you're probably going to get low volatility. And so we're starting to get low volatility and a decrease in volatility. So I know nothing, that groundbreaking or exciting in this analysis, but that's where the market is right now. It's weakening, precious metals are selling off, and volatility is coming down. And so look for that to continue. But on the other side, if we're going to be making a major bottom in the coming months, then the market would be in position for that huge breakout, especially if the economy is going to go into recession next year. All right, that's it. Let me know what you think in the comments. Talk to you guys again in the next video.